Welcome back, Alpha Hunters. Okay, so we just wrapped up the week of March 18th in the market. So let's quickly go over what's going on this week, or what happened this week, and what we can kind of game plan for going forward. Okay, so we're going to look at some different scenarios and different things today because we did not get to my 400 price target, which I was really kind of hoping we would. But I do think the Russian invasion morning was the big deal on why we didn't get there. I think we would have kind of slowly chopped down and gotten there, but the low that we put in that morning of 410.64 on the SPY was the reason why we probably didn't get there. It was just too far of a gap down after like 4 days of selling in a row, which prompted a lot of buyers to come in right there. But that is okay. It's fine. And now we just need to readjust the game plan for what we can kind of expect going forward. Okay. So what I'm going to do is I'll leave this blue line here because I think there is still a possibility that we can get down to 400 by the end of March. So let's talk about what went on this week. So the big news from this week really doesn't pertain to any stock itself, but more of something that impacts the whole market, which is the Fed. The Fed came out Wednesday and said that they are going to raise interest rates by 1/4 point. Okay, not 1 1/4 point, just 1/4 point. So 0.25%. This is the first time that they have raised interest rates since 2018. Grand scheme, not really a big deal. The market seemed to think that, okay, you know what, that's fine, we can tolerate that. So the market kind of went up. So Tuesday did get bought up. Wednesday it actually did gap up higher, and this long bar that you see down here, that you do see down on the Wednesday candle, that lower wick, we sold down after the news came out and then just rallied the rest of the day, I guess pretty much for the last hour and a half. And then Thursday and Friday we were just up. That was kind of interesting, but I do think for most part the bullish move is over. And I'll show you why here in just a few minutes. But that is not a problem, okay? That could be actually very good if you are looking for the pullback, which I am. I'm still not putting long-term capital in right here at this buying level. We're still at really elevated levels for our long-term trend area. So what I want to do now is I want to just kind of show you how I'm counting, or how I'm looking at all the move ever since the all-time high of the beginning of the year, and what I'm looking at going forward. So I'm going to just kind of walk through what Elliot wave numbers we kind of expect. But I'm going to start by counting an Elliot wave 5 count to the downside. Okay, so I'll start at the top and I'll count to a 1 point, count to a 2 point, I'll count to a 3 point here, a 4 point here, and then a 5 point down here. So what's interesting about that is it looks pretty good. It actually looks pretty uniform, pretty good. You can actually count this as an ABC, but we didn't continue the upside, so that's why it's a 5 count down. And then what we can also count is an ABC corrective phase, right? So we got a 5 count down, so now we should look for a ABC corrective phase. So that's the start right here, and then that's a A. We have a B right there, and then a C. Now, I'm not going to say that this is the top of this move, but what I'm going to look for now is where we open on Monday. If we open higher on Monday, I think we will sell down. So if we open right at this 200 moving average, which we almost got there today, so if we open at like 446 on the SPY, I would look for the sell down, and I would probably open shorts immediately upon market open on Monday. So that's what I would be looking for. If we open down, if we open a little bit negative, we could trade higher and go hit this 200 moving average and then start a rollover, or we could just start selling right away. I'm going to look for scenario 1 where we trade higher to 446, and then I would look to probably take on short positions as the market probably sells back down. But the key level will be this one candle. The low of Friday's candle of around 437 or so. If we get below that on Monday, and close below it especially, I do think we will start to make that push all the way back down to 400 and we might get there by the end of March. I know that is a drastic move in about a week and a half of market time, but you know the market will, as we've seen, can make some pretty dramatic moves. So actually, it's about almost 2 weeks, 2 full weeks of market time. I would just be a little cautious on trying to buy right here. The other scenario, and another scenario that you could see happen, is very much where this ABC actually becomes a 1, 2, 3, 4, 5, where instead of we have, I'm going to bring back up the 1, 2, 3, 4, 5 counter. So 1, 2, 3, and we come back down somewhere in this level, hit a 4, and then we come up and hit a 5, maybe something like that. That is very much still a likelihood, possibility. Not going to say it's not going to happen, but it's just going to depend on how much selling we get Monday, Tuesday. If we start to go sideways midweek next week, we might potentially just start to break higher. So if you are going to potentially look to play this to the downside, to the short side, the bearish side of the market, I would do it early next week, looking for this kind of a pullback. And then I would make sure your stop losses are just trailing above the daily candle. If the market does wind up turning above the previous day's candle on this 4 count down, you could probably just go and look to go long or something like that, or at least close your shorts, as that's going to be my game plan. Okay, I don't know if we do that scenario, but that would be my game plan, as I will look to go bearish early in the week next week. But as we put in daily candles, I will be having stop losses above the previous day's candle, or right at the top of the previous day's candle. And if we break above the previous day's candle, like as we start to turn this 4 around and go into a wave 5, I'll probably just close my shorts and look for that reopening position later. So here's why I do think we potentially are done with this move on the market. Okay, so we have this recent move, very, very bullish move. But I'm going to bring up the MACD and RSI, and I don't care to show these off all too often, but we have a super rare that you don't see often on the market in general. But this area, this time frame, this is the RSI down this lower area. This is the MACD. So we don't even need the MACD. We can see if we can close that. We have the RSI, which was right here at the all-time high. It was right in the middle. It was right in the middle. And currently the RSI is at the overbought territory. So if we put a line between these 2 points, we have what is called a divergence. Okay, already we have a divergence. And then if I put another one up here, I do have a trend line there. So wherever we top out on this trend currently, we will put in a divergence. Now, these are one of the divergences that I really think are very strong indications of next time we go bearish, we could have a strong move to the downside. Because what the RSI is saying is we are below the all-time high, below the peak that we put in previously, but now we're just in overbought territory, right? And if I bring the MACD back up, the MACD is in negative territory. So as the RSI is telling us that we are in overbought territory and the MACD being in negative territory, the next time the market takes a downturn, it could be a very strong bearish move. So this is why I'm not really liking what I am seeing on the market. I do think this move that we got this week was very overextended. It wasn't really on super strong volume, but it doesn't really need to be. It's just one of those things that I do think that move is a little too extended. Okay, so that's what I am looking for. That is my game plan going into next week. I'm going to look for short opportunities early, and I'm going to go out on time because I think this next move down could be a very long move. And as we get to 400, we won't bounce. as I've been saying, I'm looking for that bounce at 400. So I'm going to get rid of MACD and RSI there. And I will bring this up. So I do think if we do get down to 400, sometime by the end of March, early April, somewhere in there, I do think we'll wind up just trading through it. And we really won't even pause there much, as we did put in this bottom here. But that is where I'm going to leave it for this week. I just kind of want to show you some of the things I am looking for. We do have some counts going, really good ones as far as Elliot wave, like 1, 2, 3, 4, 5 down. And we have an ABC correction, which I do think we are at the top of this little corrective phase that we're in, and we'll probably push down lower starting next week. I do think it'll probably get fast and furious until we start to get more of a longer term, several month kind of push higher. Where we probably come back up into the 250 area, but that is what I am currently looking at, and that is my game plan for next week. Okay, so hope this kind of does clear up some things. Hope it gives you an idea of what to expect. I wouldn't expect much bullishness, especially next week. Alrighty, take care, Alpha Hunters.